Why should you use a mortgage advisor and how much does it cost to actually use one? Well, in this video, we're going to explore exactly what they do for you and if it's a good idea to use a mortgage advisor or just go straight to the bank. So stay tuned and let's find out. Now, before we get started, I need to state the following. A mortgage is actually the legal document you sign stating that you will repay that money back to the bank. A home loan is the actual money that you take to pay for your home. Now, there's a difference. For all intents and purposes, we're going to refer to mortgage advisors instead of home loan advisors, just because that's the way they're known in New Zealand. Mortgage advisors, or as some of you may call them, mortgage brokers, are actually financial advisors who have to be fully qualified to provide any advice on products like home loans. They are regulated by the government and they have to be registered. They also have to give you a disclosure document, which is freely available, which outlines what kind of an advisor they are, what kind of advice they can give you, and also their complaints procedure. You can also search their name on the company's office to make sure that they're actually registered and allowed to trade in the first place. So even though advisors have to be registered and regulated, not all advisors are created equal. So when you're sitting down with the advisor, don't be afraid to ask them any questions about their qualifications, their experiences, or any other relevant questions. If you're not sure about the advisor or you want to find a great advisor, head over to endorseme.co.nz to find a qualified advisor. So another question, how are mortgage advisors actually paid? Well, they get paid commissions by the lenders for placing business with that lender. The amount of commission depends on the type of lender and also they're based on a percentage of the loan amount. So essentially the bank actually pays for their service, so their service to you as a customer is free. Some advisors are also paid a trail commission, which means every year they get paid to make sure that that loan is maintained with the customer. Now, that money that they receive isn't always theirs because there's a clawback period. If you as the customer repay that lending within probably about the first 27 months, then they can be clawed back those commissions, which means that money isn't really theirs until probably about just over 2 years. So even though it sounds like a great deal to get good commissions, you have to really budget well and make sure that those funds are used correctly, otherwise it can be clawed back. Now you might think that sounds like a great deal for them. They essentially get paid commission for doing something that you could probably do yourself. And you may be right, except you're not. If you go to the bank yourself and you try to apply for the loan, you might get declined on a small policy difference that you didn't know about. Mortgage advisors have access to a lot of lenders, and as a result, they need to know exactly what kind of policies those banks have and also the kind of products they have. So if you go to your advisor, their job is to help you through the whole process from start to finish by recommending the best lender for your situation and also making sure that loan gets approved. They have a much higher possibility of getting the loan approved and also at a better rate. So essentially their role is to get you the best lender, which is the bank, the best product, which is the type of home loan, and also the best possible price, which is the best rate. They can save you thousands of interest if you just have the right product in place and they'll know exactly where that fits for you. The other advantage of using a mortgage advisor is they don't always just work within banking hours. They can probably see you after hours or even on weekends, which means you don't have to take time off work. Some of them even do online meetings, which again just means you save a lot of time. As I said earlier, mortgage advisors have access to a lot of lenders. A lot of those lenders are non-bank lenders. So if you're one of the big banks, you need to play by the Reserve Bank rules, which means tighter lending restrictions. If you're a non-bank lender, you don't have those same restrictions imposed on you, which means you can do lower deposit lending and also accept customers that might have blimps on their credit history. So by going to your mortgage advisor, if the big bank says no, there's always another option to try and get you that loan. So it's definitely a good idea to go see them and ask them for their advice. Now, if you have an existing home loan already with a bank, your mortgage advisor can actually negotiate a better rate with your bank when it comes up to fixed rates or even some floating rates. So if you wanted to have a better rate and save a bit of interest, just see a mortgage advisor and ask them to negotiate on your behalf. Let me ask you a question. If you're going to buy a house and someone said to you, they can take care of the whole process, making it stress-free, they can save you thousands on interest, and they can help you pay off your loan much faster, how much would you be willing to pay for that service? Food for thought. So I hope this video has shown exactly what a mortgage advisor does and how that can benefit you. And if I didn't make myself clear through this whole video, it doesn't cost you anything to use a mortgage advisor. Simple as that. So that's it for this video. Thank you for watching, and I hope you now understand a little bit more about your mortgage advisor. Please subscribe to my channel, leave a comment, and if you have any questions, come straight back to me. Until you see me next time, see you later.